Hello, my name is Roger Gifford and I chair the UK's Green Finance Institute. Two chapters of the Dasgupta Review, in particular, 17 and 20, discuss the risk to the finance sector of biodiversity loss and its role in potentially harming nature. They also look at the opportunity to mobilize capital towards nature positive outcomes, as has become the phrase that we like to use. Several of the recommendations also emerged from the early sections of the review, and they revolve around assessing nature-related risks within portfolios and loan books, and best practice around reducing that risk, often within clients' supply chains. So I'm delighted to be joined by two guests to discuss how their firms are tackling these particular challenges. Gwen Yu, Head of Engagement Transformation at BNP Paribas, and Christopher Wells, Global Head of Environmental and Social Risk at Banco Santander. Thank you both very much for joining me for this session. Gwen, let me start with you. Can you give us a sense of why it's so important for financial institutions to assess their nature-related risk and some of the inherent challenges and barriers in doing so?
Thanks, Sir Roger, for having me here today. And I guess if I start with, if you look at the news, a lot of the financial institutions recently have been making commitments on net zero and biodiversity, BNP Paribas being one of them. So for us to live up to these commitments, it's important that we understand what our dependencies and impact will be on both climate and nature. We need to do this because we need to walk the talk and because all this will impact our bottom line. So if I go through the different business lines that we have at BNP Paribas, from a banking standpoint, if our clients' operations are not nature positive, as we're saying now, then it's going to cost us in the long run if they go belly up because they have poor water management within their operations. From an asset management perspective, that's part of our fiduciary responsibility to our investors. And as an individual investor myself, more and more people are aware of where they want their money to go, and we don't want to be investing it in products that are nature negative. The main challenges to all this, because talk is cheap, right, is that how are we actually going to be able to do this? It's on data and applicability, because the data that we're looking at, it's dispersed. It's in asset classes, jurisdiction sectors, and different levels of that. And nature is more complex in a sense than climate because you have a lot of interdependencies, and it's not just one number that we're looking at. It's not just greenhouse gas emissions. So all this makes application and implementation more complex.
I can absolutely imagine, and indeed as a banker myself share those concerns. But Chris, what about Santander? I'm sure you too are looking at nature-based risk in certain sectors, but how are you bringing those findings into your credit assessment work? Is it by individual company or is it general principle?
We look at it through individual companies. The motivations are exactly the same as Gwen mentioned. Just to sort of summarize, basically what we want is to have good management of nature by the soft commodities producers, not only looking at the soft commodities producers, but look at our own portfolio. So if we're dealing with people that are cutting down tropical rainforests, that will affect rain and that will affect reservoirs for generating hydroelectric power. So it affects the whole portfolio. We look globally at our soft commodities producers, in other words, pulp and paper, palm oil, soy, beef, through a global process that involves a questionnaire that looks principally at the supply chain. In other words, the actual factories and mills where these companies have operations are an important part of our analysis, but the key part of the analysis is what do these companies require in terms of where they purchase palm oil, soy, beef, wood for various uses. And so we look at various certification systems. We also do checks on some websites that rank companies according to certain environmental criteria. So that is an important way that we look at companies globally. Specifically in Brazil, Santander has a major Brazilian operation. We are the largest private sector bank in Brazil. We go into great detail into individual loans for farmers and ranchers in all of Brazil, but especially in the Amazon. So this goes into checking whether there was illegal deforestation on that particular plot of land where we are financing, whether there has been any encroachment by the farm on indigenous territories or on parks. And so all of this information is looked at on an individual farm by farm basis for 12,000 properties that we finance in Brazil. So it's a very detailed job that we do to ensure that our agro portfolio grows sustainably in Brazil.
Gosh, if we've got time, I'd love to ask you later if you feel it's getting better or getting worse. The news doesn't always make it sound better, but maybe it's a lot better on the ground than actually happens in practice. But on this, in this particular subject, what's your approach been here? Have you got particular guidelines, particular tools you can use which you found are robust and useful for banks to kind of, in particular, but maybe investors too, but useful for banks to get involved with?
Yes, we definitely we use, for example, we were the first bank in Brazil to have require FSC certification for wood, for tropical wood. We also do not allow financing on top of peatland forest areas. We also were one of the founding members of the Roundtable on Responsible Soy, RTRS, which is the main certification system for soy. I was its first president for the first 3 years during the process of when we developed the certification scheme. So we use several standards as part of our credit approval process, and we also engage with these various forums to move the whole process ahead and get the ball moving ahead.
Yeah, and again at BNP Paribas, we're probably talking a very different sector of the market, but where do you, which sectors are you exploring, and are there certain tools that you've been using to help make those assessments?
So I'm going to answer the last part of the question first, because I think if I go through some of the examples of the tools that we're looking at within the different business lines and then come back to the sectors that we're actually focusing on as a group. Within asset management, we're looking at things like Encore to assess dependency and the impact of our portfolio, because this will enable us to track our biodiversity footprint, at least to start with, and then to reorient that portfolio going forward. We've also worked with the Natural Capitals Coalition to assess seafood sourcing and plastic packaging on companies within the consumer sector. And this is to come up with factors to score them and give them an ESG rating in order to incorporate them into specific portfolios with specific mandates. In the banking sector, more globally, similar to what Chris mentioned, Santander is doing, is we're doing this at our whole corporate lending portfolio, is to integrate biodiversity as part of the KYC questionnaire, so that when it goes into our credit committee and our risk assessment, then it's incorporated into cost of capital that we're looking at for that specific client. In supply chain financing, then we get into more targeted things like the Trado project, where we really tracked from the first mile information all the way to the end consumer. This was for tea. Everybody was involved. There was a lot of people there. There was CISL, IDH, Sainsbury's, Unilever, Barclays, Rabo. I'm sure I've forgotten someone. And it was a good proof of concept because it showed us that we were able to gather information from all these different partners, and we were able to track it all the way to the end consumer to figure out how traceability could potentially work in different types of commodities. Yeah. We've also looked at trace, right, to see how to evaluate that for specific commodities, and different programs within supply chain to see how suppliers can benefit from beneficial rates. And in terms of sectors, Right now, we're really looking at our impact on land and sea as part of our biodiversity commitment. So this will have our sector policies within the Cerrado, for example, that we recently strengthened to include, further soy and beef producers. And we're also mobilizing 4.2 billion euros in capital towards biodiversity specific to blue economy. We're looking at the shipping industry to see how we can enhance ecological transition towards marine vehicles, blended finance on the coral reef fund, and then more traditional types of instruments.
Very interesting. And I guess both of you, all three of us, would say one of the biggest problems we have is the gap in data. And I'm just wondering if you would prepare to comment on how well you think the data is currently being disseminated, and also actually the type of barriers that you see in doing this kind of work. And Chris, I'll come to you in a moment to ask you exactly the same question.
The two barriers for me, the two barriers to me are really time and fit for purpose. So if I look at time, I touched on this, and Chris touched on this, and you did too, on just the fact that it's dispersed, right? At asset level, jurisdiction level, sector level. If I go into specific examples, I think that'll help, because if I'm looking at asset level, then I want to look at where how much of that commodity are we sourcing, where are we sourcing it from, which mine, which vessel, which which farm, what's the environmental impact in terms of each asset at each location. What is the land sea conversion, the jurisdiction level, maps of localization, how do I use blockchain, how do I use satellite information that we're getting, how does that work within traceability? And then what is the materiality and the impact of each of the sector that we're looking at? So all this needs to be contextualized. And on top of that, targets need to be set at a sector specific level. So the data is out there, because one of the excuses that you hear from a lot of people is that there's no data, but there's a lot of data. But
too much.
There's too much data. And us as financial institutions, the companies, the data providers, we haven't really been looking for them. And then this gets to the fit for purpose, because it's not necessarily in a format that we're able to use. So how do we do that translation of harmonization, target setting, data collection? And all this takes time, which, we don't really have. And as FIs, we're risk averse. So things get pushed down. And I think what gives me hope is that we're really seeing an increase in data providers out there, and specialized biodiversity data providers that's trying to consolidate all this so that we will be able to use it.
Chris?
Sure. Yeah, the same thing. We also use Trace. Trace has helped a lot. Trace has a big focus on Brazil, where we have a major operation. We also use Global Forest Watch, and we use a Brazilian software called Map Biomas. So these are integrations of sort of, you can use satellite imaging together with commercial data, sometimes together with government data, and this helps us a lot. Another gap, or how can I put it, is, like you said, there's too much data when it's like not well organized. But some of the data providers, some of the free data providers are able to package it. There are also companies that, for a fee, are able to package this nicely and bring it together. Where there is a gap, and this is something that may surprise some people, Brazil, in spite of all the news that we've heard, has a tremendous amount of information that is put by the Brazilian government on the internet about environmental fines, about permits, about embargoes, a whole range of information, which is used by several companies to provide services. So that when we look at our Brazilian operation, we can be quite sure in terms of the legality and the good management of certain companies and certain farms. That is not the case of many other countries with tropical forest. So what would be nice is if governments could commit to having the same level of data quantity and data quality that could be used by banks, could be used by buyers, soy buyers, whatever, because this kind of data really really helps, and it's impartial data. It's government data that we can all have access to.
I'll take that as the positive on Brazil rather than a negative, Christopher.
It
sounds
definitely is. Yeah.
Good. Well, that answers the question I was going to ask you at the end. I think we're running out of time for this very quick session, but I did have one more thing I'd like to raise. And if the producer needs to cut it at this point, that's fine. But I'm very interested in this whole burgeoning TNFD that's coming up. At TCFD, it's a pain in the neck for many companies, but they're embracing it. They're taking, now we're going to load them down with TNFD. And I just wonder whether you think that's useful, whether it's going to be helpful for this greater assessment, and will it can we have any confidence that it's going to do what it says on the tin, like it says it for TCFD? Maybe Gay, you'd start with that one.
If I boil it down to one word, is that TNFD is going to bring us. No, it's okay. It's going to bring us transparency. So it's going to push visibility for nature for the financial institution, because our clients are going to disclose on their impact, their dependencies, and risk on nature. Then us will be able to disclose upon that to our clients, and the right investment and financing decisions will be made so that in the end we'll be able to incentivize the right nature positive solutions and behavior.
Yeah, I think transparency is definitely the word, and the more transparent, be it on carbon, be it on climate change, and on biodiversity. I think in addition to the transparency question, is something that we should bear in mind is that there is a criminal element going on here, which banks are starting to look at, which is there are criminal organizations involved in deforestation, that involved in illegal logging and so forth. So our compliance departments, and I believe other banks are doing this, but certainly we at Santander are doing this, are looking at the link between companies that are involved, or individuals or small firms that are involved in, say, possible drug trafficking, money laundering, and illegal deforestation. So there's another angle, not just the credit angle, but the criminal angle that banks are starting to look at.
Very interesting. Very interesting. Well, Gwen and Christopher, thank you very much for a very interesting session. I think on that note, we will looking forward to sharing your insights and for feeding into the recommendations. And I very much hope to see you there and having a good discussion after that as well. So thank you both very much indeed. Great to talk to other bankers, if I may say so, about this. Okay, thank you.